Global markets are under pressure as the US-Israel war on Iran deepens, sending oil prices higher and shaking investor confidence across regions. In Asia, stocks extended their sell-off on Tuesday, while the US dollar strengthened on safe haven demand. Japan's Nikkei fell more than 300 points at the open, and Taiwan's benchmark slipped despite early gains in chipmaker TSMC. South Korea saw the sharpest reaction. The won dropped up to 2% to a 3-week low, while equities slid as much as 5.6%, their worst session in nearly 4 months. A temporary trading curve was triggered after futures plunged more than 5%. The dollar index climbed to a 6-week high as investors weighed the inflationary impact of rising oil prices and the possibility that the US Federal Reserve may delay rate cuts. Energy importing currencies, including the Thai baht and Philippine peso, weakened further. Economists say central banks in Asia may now postpone easing plans as inflation risks resurface. In Pakistan, the shock was severe. The Pakistan Stock Exchange recorded its steepest single-day drop on Monday, wiping out 1.74 trillion rupees in market value. The benchmark KSE 100 index fell nearly 9.6%, its largest ever one-day decline amid panic selling. Trading was briefly halted under risk management rules before a partial rebound, but the index still closed deeply in the red. Since January's peak, the market has fallen almost 20%. Pakistan's heavy reliance on imported oil makes it especially vulnerable. Every 10% rise in crude adds roughly $1.5 billion to the import bill, raising inflation and currency pressures. In contrast, the US markets ended close to flat after a volatile session. The S&P 500 was marginally high, the Nasdaq gained modestly, and the Dow slipped slightly. Early losses following the weekend strikes were offset by dip buying, suggesting some investors believe the economic disruption may remain contained. Defense and energy shares initially rallied while travel and rate-sensitive sectors came under pressure. Later in the session, technology stocks attracted inflows as investors reassessed the inflation outlook and Federal Reserve policy implications. In Australia, however, equities marked their weakest session in more than 2 weeks. The S&P ASX 200 fell 1.3%, weighed down by miners and gold stocks amid profit-taking. Energy shares rose to their highest levels in over 18 months as oil prices surged. The Reserve Bank of Australia warned that rate hikes remain on the table if inflation expectations drift higher, though analysts suggest policymakers may wait given the geopolitical uncertainty. New Zealand's benchmark index also ended lower. In Africa, the South African rand held steady despite global volatility, even as investors sought safer assets. Analysts say oil importing currencies like the euro and yen remain more exposed, while the rand's direction will depend on global inflation dynamics and US policy. Across regions, one theme dominates: energy. Disruption in the Strait of Hormuz, which carries about 20% of global oil supply, has pushed crude prices sharply higher. Oil is now up roughly 30% this year, including a near 10% jump after the weekend escalation. For Asia, which accounts for nearly 70% of oil shipments through Hormuz, the stakes are particularly high. Markets are now recalibrating for the possibility that the conflict could last weeks rather than days. Rising oil prices threaten to reignite inflation, narrow the path for rate cuts, and complicate fragile economic recoveries.